So good afternoon, everyone, and I welcome you all to this panel on institutional adoption. So the topic for today's panel will be on how will we bring the next $1 trillion via the institutions. And today on this panel, we have leaders from all across the institutional stack that we have. So we have people from blockchain infrastructure companies. We have people from publicly listed companies which are building digital asset treasuries. And then we have people from crypto exchanges, one of the largest global exchanges. So now, to start with, on this panel, we have Ignacio from Bitget, one behind the organization that's building one of the very big global exchange, bridging a lot of long-tail assets, right from stocks, crypto, and a lot of other things. Then next, we have Nikhil from EMURGO, a co-founding organization behind one of the OG blockchains called Cardano, and they are driving their institutional and digital asset tokenization push towards the next thing. And then we have Siddarth from Jetking, one of the very first publicly listed companies from India that has built a digital asset treasury around Bitcoin. So yeah, with this, I welcome you all again, and we start with this panel. So to start with, I'll request all of the panel members, starting Ignacio, to give a brief introduction, and then we can start learning more from them about the topic.
Hello. Hello, everyone. Good evening. Nice to be here. My name is Ignacio. I'm the CMO at Bitget. So we're a new universal exchange. We're bridging centralized exchange, decentralized exchange, real-world assets. So we're building a platform that can help people get access to financial products. Nice to be here.
Good afternoon, everyone. So my name is Nikhil Joshi. I'm the COO of EMURGO. As Vikram said, we're a founding entity of the Cardano blockchain. The booth is right there, so please come along and say hello. We'd be very pleased to meet you. Aside from being a founding entity of Cardano, we aspire to be a Web3 finance company. So that means that we are using blockchain as rails to send assets back and forth, or indeed using crypto and non-crypto products as products that for payments, settlement, borrow lending, speculation, and hedging. Thank you.
Hi guys, I'm Siddarth Bharwani, Joint Managing Director and CFO of Jetking. We are an IT training company listed in the Bombay Stock Exchange since 1983. And just last year, around the same time, we became the first Bitcoin treasury company of India, and totally holding about roughly 25 Bitcoin on our balance sheet.
Cool, perfect. So thank you all for the introduction. So to start with, we'll start with a very basic and a cliche question, but again, so tokenization, institutions, they have been the talking points in the last 1 or 2 years. We have been hearing about MicroStrategy and a lot of institutions tokenizing a lot of assets and a lot of those things. So to start with, what do you think are the catalysts that will drive the next $1 trillion into the crypto space?
Well, I think definitely what's going to bring liquidity is massive adoption. So we see now companies having Bitcoin treasuries, which are doing it in a strategic way. If you go back, let's say 3 years, I think people who were doing Bitcoin in their treasuries, they were pretty much taking a leap of faith. It was like a bold move, but it was like maybe not. It was not like done in the right way. So you fast forward to today. Before the infrastructure was very clunky, it was not built for this. But today you have institutional grade custody. You have platforms that can help people do their Bitcoin treasury, their digital asset treasuries, right? So I think the fact that now you're going to have a safer place to be able to store these assets, this definitely is going to bring a lot of the institutional money into the crypto space.
Yeah. What do you think, Nikhil?
So first of all, I think $1 trillion sounds like a big number, but the market cap of this space is broadly, let's call it $3 trillion already, right? So getting an increase of another 25% is actually won't be that difficult. But to answer your question, I think, and essentially it's a question of mass adoption, as you say, right? So I think the capital efficiency that tokenization and using blockchain rails brings will be the driver for more commercial organizations actually adopting blockchain. The ability to settle, and the capital efficiency that you save from doing that, which frees up the capital to use somewhere else, is significant. I think certain things like ETFs and DATs are a good way of creating a certain level of normalization, be it through access to the product or simply becoming a bit more, should we say, day-to-day understood, right? So creating mind share in generally people's minds. They're good, but I think the real kind of pivot will be where organizations, institutions understand the sheer level of capital efficiency that will be opened up through adopting these rails.
So I have a similar thought process, right? So I think the first 10 years in crypto, or since Bitcoin was born, was largely pushed by the community. So say 2010 to 2020 roughly. 2020 to say the next 2030, for example, would be corporations and companies adopting and expanding their blockchain footprint. And 2030 onwards, there'll be countries who will possibly come in and see how maybe stable coins are scaled or any other blockchain solutions. So I think what it really takes here is all traditional companies wanting to explore what is happening in blockchain as a technology. And while doing that, they can also get access to what Nikhil mentioned about ETFs, Bitcoin treasury companies. In the last year, there was 200 plus companies that became DATCos, for example. So what that does really is expand the entire horizon. And I think this is just getting started.
Awesome. So yeah, as all of you mentioned, like ETFs have been there. We had DATs very recently. A lot of assets getting tokenized. I think so, and stable coins, again, a nature of a tokenization itself of fiat currency. So yeah. Now coming towards another question, given that all of you come from various stacks of this institutional layer, so like from your vantage point, what do you think are the top 2 to 3 like top use cases and very concrete ones of the institution around institutional tokenization and bringing institutions into the space?
Well, I think the first one we're building, today we have tokenized stock futures. So I believe that tokenized assets are definitely going to give access globally to more people, right? So when you tokenize this asset and you put it on the blockchain, you have access like 24/7 to these assets. So this definitely is going to bring adoption. I think the fact that companies are starting with digital treasuries, this definitely is also going to be something that's going to be impacting and it's going to probably bring more and more people into the institutional space. And lastly, I believe that the fact that you can pretty much operate on a 24/5 definitely opens to new markets. We're a global company, and I think also it's about changing the perception that it's like you're buying crypto, but I think it's more like an asset class. So people are now starting to, for example, we're a universal exchange. So we bridge centralized exchange, decentralized exchange, and real-world assets. So real-world assets also bringing in them into the tokenized world definitely is going to be a thing that we see coming.
Over to you, Nikhil.
Yeah, so I think it is real-world assets, but that's quite a broad umbrella term. So, you know, we have a theory that you can tokenize listed debt, listed equity today, but let me start that again. In a few years' time, everything will be tokenized. I'll start off with the good news message. I think tokenizing listed debt, listed equity today has minimal accretive value, because by and large, the rails that exist today work kind of okay, right? But tokenizing those things now probably gives you market share and name and credibility for when all of assets come to those tokenization rails. For EMURGO, we have a view that actually the ability to monetize is within the private credit space. So that is something that by definition is opaque, it's bilateral, it's not liquid. And so putting it into a digitized format, but not only that, tokenizing it, i.e. on blockchain, gives it that additional cherry on top, which is the ability to then not only actually create more liquidity, because you have the marketplaces and the distribution, all of that stuff still needs to work, right? You can't tokenize and have immediate liquidity. So those things need to work, but aside from that, the ability to track everything, et cetera, that's where you get the real juice on that particular asset class, right? So private credit is specifically within real world asset where the asset class that we think is going to move most quickly and with most volume.
Over to you, Siddarth.
So I personally feel whatever is worth tokenizing should be tokenized. I think in blockchain as an infrastructure, whatever's on the blockchain already is there, right? So what you have to really do in the next wave is to bring real-world assets. Personally, I think most of your transactions, most of your interactions, most of your content for that matter, or any other industry that you're part of, has a use case in blockchain. And I think eventually, if you're not thinking of tokenizing your real-world assets, you will be left out. It's as simple as that. And this might think like a distant dream, but I think in the next 24 to 36 months, there will be rapid adoption of real-world assets in across the world, and all of that will be accessible on the blockchain. So it's just a matter of time.
Yeah, please.
So I think that intuitively, the ability to tokenize makes sense to a lot of people, but I think there is a bit of conflation or assumption that just because you tokenize, it renders an asset more liquid. It doesn't. And so real estate everyone talks about real estate should be tokenized. Yeah, it probably should be tokenized. But again, the tokenization per se is not hard. What's hard is creating the marketplace, the distribution, giving access. How do you create demand, right? Because you can tokenize this hotel. All you've got now is an illiquid, digitized asset. You haven't necessarily got the distribution networks. That is the hard part in all of this. And especially with a digital product, which means it can go across border, you're immediately going to face some regulatory challenges, right? So it's the regulatory piece, the legal piece, and first and foremost, it's the distribution channels that need to be put in place before everything can start to be tokenized.
So I think there's also that shift of the industrial age coming into the intelligence age, right? So like this hotel example, for example, they should definitely be looking at what solutions they bring in on the blockchain today. I mean, just having a key card, for example, is redundant, according to me. And just evaluating what all you can solve for on the blockchain, I think it's brings in the real-world access.
Also, you very interestingly mentioned about anything could be tokenized. And very recently, we have been seeing a lot of long-tail asset getting tokenized. So in India, we have had a company called Mugafe tokenizing movies. We have even seen some of the use cases like people tokenizing uranium. So one company in US. So yeah, very rightly said. Now talking about another thing, very interesting topic that you touched upon, Nikhil, was institutions, regulators, right? So given that all of you guys work with institutions, or some of you are institution itself. So like institutions are always cautious about digital assets, but they do understand the benefit of it. Now, what are these internal or external reasons that they make them very cautious taking their first step towards digital asset? Yeah, maybe starting with Ignacio.
Can you repeat the question?
Sorry? Yeah, please. So the question is, institutions understand the benefit of digital assets, but the thing is they're very cautious. Now the thing is, what does this, and all of you guys deal with institutions, or you are institutions yourself. Now what are these internal or external concerns or cautions that you guys see while dealing with these institutions, and what is stopping them from taking their first step?
Yeah, I mean, first, I think they have mentioned that it needs to be relevant. So if you're going to do this, it needs to be because of you have a reason of why you want to do it. So obviously, internally, there's going to be factors that are going to affect, which are going to be infrastructures, creating like the technology, adapting it, and including it in the usual or the ordinary setup that you have. A lot of people are kind of scared of technology. I think technology comes to help us and to make things easier and better. So this part about technology, definitely with more elite products and setups that are done exactly for corporate or institutional use, this definitely is going to go in. Now, also you have volatility in the market. So I think there's different assets. You know, you have stable coins, you have Bitcoin, you have other crypto. So I think it's also to adapt to the model of what your company is doing. And definitely externally, I think it's going to be government regulation. I think one of the biggest problems with when you talk about crypto is innovation needs to be at the forefront, because if you don't innovate, you're not relevant. But then you move forward, and then regulation is behind you. So I think there's a disparity between like regulation and spearheading the innovative product. So for us, at least, we believe that there should be, at least as an exchange, for us, in order to be able to grow, you want to have innovation, you're gonna which is gonna give you the relevance in the market. Second, compliance. That's gonna give you longevity. And then the last and not least is liquidity, because liquidity brings efficiency. And if you don't have liquidity, then none of the others are gonna happen. So I think between these two factors, as long as, I think if we can find a place where technology innovation aligns with the compliance, I think that's where also where I see more people starting to dip their toes. And also I think we see more and more companies, not only tech companies, not only crypto companies, which are now putting digital asset treasuries. So I think these next 2 years, probably with the advancement of technology, with the advances of seeing more and more companies, this is definitely going to bring some trust. And when trust is built, liquidity follows. So I think that's it.
So just the key takeaway from this would be regulations, compliance, trust, maybe liquidity as well. Yeah. So over to you, Nikhil.
I'm going to repeat some of those points, I think. I think education. So there is, institutions are not necessarily always set up for having an innovative arm within the organization. And so typically what they will know is what the narrative is that's out there. Oh, like, oh, this layer one, what is it for? With that layer one, what is it for? And actually, the answer is it's a technology stack, so it's for whatever you want it to be. Now, does it serve your purpose or not? That clarity of thinking and understanding doesn't exist. So that there is an education curve that institutions need to come up on. Then regulation. Like, it's a really boring word, but institutions will not move forward in most cases without clarity from regulators on what they can and can't do. Then I think it's going to be custody. So if you're holding these assets, are you going to have, the in-house capability and understanding of how to look after your own assets in cold storage? No, right? So you need to learn how can you custody your assets in the right way? And then I think the last point is just composability, right? So the ability to move assets from one type to another, a certain level of fungibility, that will bring the liquidity as well. Right, but it also depends on, are you thinking about blockchain as an infrastructure to move things back and forth, or are you thinking about crypto as a product that you invest in and, for example, put on your balance sheet or something else, right? So there's a conflation of those 2 points that comes back to my first point, which is education.
Yeah, I think that does make sense, because education is something about crypto, because this is very big, very deep technology. And something very new thing, unknown, and there are a lot of unknown involved for institutions. So I think education definitely is one of the major points for that. So coming to Siddarth, so you have dealt with a lot of regulators in India itself. So like also adding that perspective. So what do you think about the overall thing? Yeah.
So far, I think specifically with regulators, I think when they look at technology, it's a reactive approach. If a company has disrupted something, or if a business is coming in, I think during when Uber was coming into India, they built out the entire infrastructure and then faced some hurdles. For example, similarly, even for us, we started off as the Bitcoin treasury company. We got the initial approvals, and then there was some speed breakers that come in the way. So my point is that there has to be this proactive approach instead of a reactive approach. Is that when companies are solving for it and then they have an opinion on it, I think it should be vice versa. They should be understanding what is coming next, what is coming, and how it will impact their ecosystem. So that's a more proactive approach to solve the access to such technologies coming in. And I think for institutions, adopting technology should be the number one strategy, right? In their strategy stack, it should be the first or second thing. Adopting and accessing technology very aggressively they should be prudent in doing that instead of just waiting and seeing how it impacts their business. So for example, when we set out on this DATCO journey, A lot of people came up to me who were listed, and they're listed on the National Stock Exchange, Bombay Stock Exchange, and had a lot of questions around this business model. And all I said to them was just buy one Bitcoin, right? Just buy one Bitcoin, and it's legal, you get taxed, but they did not. And they waited for the regulations to come in. And if regulations possibly don't come in, what happens next? So my point is, once you take that step, after that is when you see how the evolution happens. And I think that proactive approach is super important.
Cool. Perfect. So now, while we are talking about regulations, and it's a very common point across all of you, so while dealing with this regulators and people around compliances, so like, what are the non-negotiable requirements that they might be asking you again and again? So can you list those and enlighten us on those things? Yeah.
So I mean, the non-negotiables is going to be always security. So I mean, I think regulation comes in when adoption comes in, because these are like people's funds, right? So for us, I think proof, at least from an exchange side, proof of reserves. Today we hold 1.8x proof of reserves. We have a protection fund, which in the last 3 months has been 700 million. And I think you need to have a proper compliance framework and setup, because the hard thing is, as we're talking, things change. So on one side, for us as exchanges, we need to get more clarity from the regulators, because sometimes there's like a gray line, right? So I think having the proper infrastructure, using multi-sig, using the tech behind. I'm not going to bore you with the tech terms, but basically having wallets, storing money in cold wallets, and having a proper system that's going to keep your clients' funds safe. And yeah, and having this process, like this compliance process framework set up.
Yeah, that makes sense. Over to you, Nikhil. Non-negotiable requirements coming from institutions.
So non-negotiable, I'd say, if you're running your business on some kind of operating stack or technology stack, the minimum requirement is it should not break, right? So unabashed self-plug here, but Cardano has been running for 8 years. Not a single problem, right? People have tried to attack it most recently, about two weeks ago, right? It is still up and running. Any operating stack, that's the minimum you want for it. It should run. It's very robust. That's another reason why institutions will not move forward as quickly. They're waiting for time, right? Because time is going to be able to show whether you can kick the tires hard enough on something and can it withstand the kicking. So that's another reason they'll hold off. But anyway, minimum requirement, don't break.
So I think the top two things I would consider is transparency and information sharing, right? So because you're adopting something which is unknown, and what they want to really know is what are you up to? What do you want to do? What do you want to do next with this, right? So for example, we have a dashboard which tracks it to the cent in terms of how many Bitcoin we bought. And that's accessible to the public shareholders, to the regulators, who are who. And ultimately, I think transparency becomes supremely important in a domain like this, which is blockchain. And then information sharing, which is real time, which is something which is not waited for an audit in an industrial structure, which is you wait for audits, you disclose your results. If your information highway is real time, I feel like I think those things keep regulators at an ease, and which is easy to move things forward.
Information and transparency, again, proof of reserves, and yeah, a lot more things like decentralization. So all of that makes sense, yeah. Now coming towards like another question, we are talking about regulators like in general, but let's say if we have to understand like which are the regionally, what are the top regions or where the institutional adoption has been happening very rapidly, and what are the other emerging regions where this is taking place based on your experience working around these global institutions, yeah.
Yeah, so for me, I think US is leading the space. I mean, they were in a gray zone, and now with the new president, he came, he approved. So I think they're moving forward with it. They're pushing people to build in the business. They're giving like good examples. And I think that when the US mainly builds something, a lot of them follow. So I believe that probably like Asia, Singapore are like other regions which are pretty much advanced. They have their frameworks, and I think the fact of where it works, it's going to be about clarity, how governments can make it. So as long as the regulators can provide clarity into what are like the frameworks that people are going to operate with, one, it builds trust because people feel safe and they're like, okay, there's no like no like gray line around, and it's pretty clear. And I think that sets the stage to build trust and to have people onboarding.
Over to you, Nikhil.
Yeah, so we are headquartered, EMURGO, we're headquartered in Singapore, and so I'd say our sphere of experience and network is really, should we say, it's east of UAE, right? I think Singapore, the MAS has been quite front-footed. I'd say perhaps with perhaps the exception of scenarios like FTX 3AC, where they've been a bit embarrassed by that. They've largely been very open to the idea of innovation for the purposes of financial services. Hong Kong was in and then out and then back in again, I think partly driven by the China policy, shall we say, but there's a bit of a, pull and push between Singapore and Hong Kong, but both very front-footed. Japan is starting to turn, right? The regs and the tax got very unfriendly back in 2018, 2019, but they've started to U-turn on that a little bit. And so in Korea, there's a very healthy appetite, particularly at the retail level, right? We know that just from the amount of flows that go in and out. Whether the regulators as advanced as the retail population is in Korea, I don't exactly know. And then, of course, there's UAE, right, where a combination of VARA and the other bodies are being very, very welcoming with open arms to anyone who wants to come in. Now, that may introduce different problems, but insofar as engendering a spirit of trial and error and being innovative, they would probably stick out for me in terms of the most open-minded of how you play with these technologies to find real utility.
Yeah, so there's been a good evolution across the world, right? I think India is still chilling. I think
and just a while back, we did speak about adoption in Asia also with the DATs, yeah.
Exactly. So it's been super rapid across everywhere across the world, right? And I think America is leading the charge for it. They went through their set of challenges maybe 5 years ago, and right now while the president wants to be the crypto president of the country, but I personally feel the innovation there has been rapid and has been forthcoming. Across the world, if you see even in Dubai, for example, or UAE for that matter, they are welcoming the technology with open arms. They have their regulatory guidelines of VARA or any of those other structures that are already in place, and they're quite mature. And they've taken it by being proactive. So I think places like this, Singapore as well, the mass regulators have a clear identification of what needs to be done for this industry. I personally feel everywhere else across the world there's going to be a lot of copy pasting, and it's only in India that it's slow and steady and cautious and whatnot.
I just wanted to answer the opposite of that question, which is who's the slowest, right? So I'm going to be a bit vitriolic here, but Europe is asleep at the wheel and the UK is going backwards. I just needed to get that off my chest. I don't know what the UK is doing, but they're showing a very good lesson in how to shoot yourself in the foot.
Any emerging markets you would want to mention? I'm sorry? Any emerging markets you would want to mention when it comes to institutional adoption?
Emerging market. No, do you know what? Emerging markets have the most incentive to innovate, right? You look like this is not necessarily a crypto point, but look like the Union Bank of Philippines stands out as an institution which is so front-footed in how they think about innovation and how they adopt it, both in-house for infrastructure purposes, as well as how they apply it to their customers. So the emerging markets have really strong incentive to apply all sorts of innovation, including blockchain. So the regulators don't really have that much incentive to get in the way of that adoption because it provides real-world value.
So thank you for that. Now coming towards the very last question, for all of you. So where do you see India evolving when it comes to institutional adoption in like next 5 to 10 years? Where do you see India evolving when it comes to institutional adoption? Yeah.
Well, I think that Instituto, I mean, it's already here, but it's just a matter of again, I'm going to just say, you talked about education. So the fact that they understand what is built for, why they're doing it, and have a proper use case, that's definitely what's going to bring like the next users. But yeah, I mean, a mix of communication, education, and the technology being better I mean, technology evolves and it becomes easier to use. It creates less friction. I mean, just think about when back in 2016 you tried to buy crypto. It was in a website, no interface. So, I mean, everything starts evolving and solutions get complex and they get tailored towards what they're meant to be. I mean, people were innovative and they did the Bitcoin treasuries when it was like unthinkable. But then products came that create custody, which is specialized for this. So I think we're on the right track and interesting to see where we go.
I think it should be a no-brainer, right? That the institutional adoption in India is just going to go vertical. The problem statements insofar as currency or real life day-to-day application and what can be solved through usage of blockchain, a massive population, but also a population that extremely talented, especially in the tech space and the financial space. I mean, it is a fintech country, right? In the literal sense. So it should all be there, and it just feels like, looking from the outside in, that the RBI is just getting in the way, right? And if they could just, remove some of that, it's not just about saying no, it's the flip-flopping between yes and no, the blowing hot and cold, as at least how I see it from looking outside in. So blowing hot and cold and that propensity to retrospectively apply rules is really harmful. And if they can just stand back a little bit, allow the entrepreneurs and the organizations to innovate, right? There are going to be elements that they don't like, but I always like to say, don't throw the baby out with the bathwater, right? Mitigate for the things that you have a problem with. That doesn't mean just kick the whole thing into touch. So if they can maybe just ease off a little bit, allow the space to ferment, ideate, generate some, cool ideas, I think you can probably get to a decent space. But otherwise I think it's a no-brainer that the institutional adoption and retail adoption will just go skyrocket over the next 5 to 10 years.
Cool.
Super. So I sometimes just ask this question to myself, that if Satoshi Nakamoto was Indian, what would he do? And what would he say to the government? What would he say to the regulators, right? And what I really think India is one of the best countries to have superior blockchain solutions. Building in India, a lot of the founders have moved bases just because of regulatory issues, moved bases to Dubai, to Singapore and whatnot. But I think it's one of the best countries with the youth, with the tech angle, with what we have in terms of the solutions we provide in tech. I think it's just a matter of time that the government, the regulators catch up and come up with clarity in terms of what all can happen in this domain. So to say, I mean, I can't make predictions, but I think in the next 5-10 years, India would be leading from the front in terms of where blockchain is going and where Bitcoin is going.
Yeah, that makes sense. So with this, we conclude this panel. Thank you again for everyone for sharing, insights for this discussion. We literally covered topic from all across the, stack, tokenization, regulations, compliances, and a lot of other things. So I think to conclude this overall panel, the key takeaway I would say is we will soon cross that 1 trillion mark within a decade for sure. And you guys really made even us very bullish, #Emergent very bullish on institutional adoption. Yeah. So with that, I'll again thank you for this panel and all the insightful discussions.
Thank you. Thank you for having us. Thank you.
Thank you.
Thank you.